Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you like to read what John writes on a regular basis, you can head directly to www.incomeinvestors.com. You can find the link to the website in the description below. The US restaurant industry was decimated during the health crisis of 2020, with many saying that the industry would never recover. They were wrong. Every segment of the industry, from fast food to fine dining, is thriving, well beyond pre-health crisis levels. And with inflation coming down, interest rate cuts on the horizon, and an economic soft landing in the cards, the outlook for restaurant stocks like Fat Brands Inc., traded on Nasdaq under symbol FAT, remains robust. We've actually been watching Fat Brands for a while now, as recently as early November, but recent developments have made Fat Brands even more compelling. John?
Yeah, thanks, Mo. FAT actually stands for Fresh, Authentic, Tasty. I'm just putting that out there. It's restaurant stock that owns 18 restaurant brands, including Fat Burger, Hurricane Grill and Wings, Ponderosa, and Smoky Bones. It actually has more than 2,300 franchise locations worldwide. While most restaurants were running for cover during the 2020 health crisis, Fat Brands was actually expanding its empire. In September 2020, the company completed its $25 million acquisition of Jelly Rockets, which is an international restaurant company with 325 locations in more than 25 countries. In July 2021, Fat Brands bought Global Franchise Group for $442.5 million. Now, it's the name behind Great American Cookies, Hot Dog on a Stick, Marble Slab Creamery, and Round Table Pizza. And most recently, in September 2023, Fat Brands announced that it acquired Smoky Bones Bar and Fire Grill for $30 million. And this was Fat Brands' first entry into the barbecue territory.
Position it for another strong year.
Yeah, following a record 2022, Fat Brands announced another year of milestones in 2023 and strong organic growth. During the year, global franchising firm opened 125 new stores and added over 200 stores to its now 1,200 unit development pipeline. Fat Brands expects to open an additional 150 units in 2024. Now, for example, in 2023, Fat Brands opened the 400th location for Great American Cookies, the 100th location for its fastest growing brand at Twin Peaks. The company also brought its brands to new markets around the globe, including Phoenix, Orlando, Houston, and even Iraq. Now, several Fat Brands' newest store openings in non-traditional spaces too, including airports, hospitals, and theme parks, and that will continue to be a strategic avenue for growth in the coming years. Management also noted that new development deals in 2024 will bring many of its brands to new territories, including Puerto Rico, again, Iraq, and even more restaurants to existing strongholds like Texas, Canada, Mexico, and more broadly, the Middle East.
And it reported another strong quarter.
Yeah, most recently, which is the third quarter, they haven't announced their fourth quarter results yet, but in the third quarter, at end of September 30th, Fat Brands announced that its total revenues increased 6% year over year to $109.4 million. Its royalty revenues increased by almost 5% year over year to $23.9 million. The company did report a third quarter loss of $24.7 million or $1.59 per share. Now that compares to a net loss of $23.4 million or $1.52 per share in the same period last year. And during the third quarter, Fat Brands opened 30 new restaurants. They'll have to wait until February to see how Fat Brands did in the fourth quarter full year, but strong unit growth suggested should be reporting another year of strong performance.
And how are the dividends looking here?
Well, some restaurant stocks have been stagnant, but Fat Brands is reporting strong growth and is rewarding investors with a growing high-yield dividend. In August 2022, it increased its quarterly payout to 14 cents per share from 13 cents per share, and it has maintained that payout level since then. This works out to an annual payout of 6 cents per share for an annual yield of 7.89%, and that's more than double the current inflation rate. Now, in addition to a reliable high-yield dividend, Fat stock has also been performing quite well. In 2023, Fat stock rallied a little more than 32%. More impressively, since the middle of December, Fat Brands stock has soared around 23%.
What happened in mid-December?
Well, on December 12th, it announced that Fazoli's made its grand return to Mesa, Arizona, but it's safe to say that re-entering a market with a restaurant that provides unlimited breadsticks isn't quite enough to juice that kind of rally. Instead, coincidentally, on that same day, the Federal Reserve announced it was holding its key lending rate and was willing to cut interest rates even if the U.S. economy doesn't enter a recession in 2024. Now, this includes many people expecting 3 rate cuts in 2024, with expectations for 4 more in 2025 and 3 cuts in 2026. Again, since then, FAT brand stock has advanced more than 26%. FAT stock is also up 30% over the last 3 months, 23% year to date, and I think 16% over the last 12 months. And despite the big gains, even larger gains are on the horizon. Now, currently trading at around $7.55 per share. The median 12-month share price target for FAT stock brands is $15 per share.
Thanks, John, for your analysis. FAT Brands Inc. continues to be a great restaurant stock, growing both its restaurant brands and number of global units. With more than 2,300 units worldwide, FAT Brands so far added more than 200 stores in 2023 and expect to open an additional 150 units in 2024. The new additions to its portfolio are helping the company report strong revenue growth. Despite the large number of recent acquisitions, management believes that there are significant opportunities on the horizon. These strengths should position FAT Brands for continued growth, which should also help propel its share price and allow it to raise its high-yield dividend payouts even further. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.